Hey guys, Mike here. So today we get to answer all your questions and talk about your comments and stuff. And I do want to start by saying happy holidays to everybody. I will be on the road myself, going to Georgia to spend time with my wife's family at first. And so if you're on the road, please be careful and enjoy your holidays. There will not be a video on Sunday or Mondays. I'm taking those days off, but I'll be back Tuesday. Remember, the market's closed on Monday, okay? So we have a short week next week. And so in this video, we're going to get into all kinds of stuff from your questions about blow-off tops and these buy now, pay later stocks and some other things. But of course, I do always want to start off like I do at the beginning by saying thanks to any of you viewers or subscribers who give a little extra thanks. I really do appreciate it from the bottom of my heart. And there's a $25 one and there's a $5 one as well from my friend Albert. So I really do appreciate it. And I'm actually going to start the first question off with something I'm seeing in the comments a lot. So I've explained this before. Let me explain it real shortly again. Okay, so people are saying, man, you're like the new Kramer. You're so bullish and all this stuff and all this crazy mess. And the market's overvalued, blah, blah, blah. Right? And so those who have been with me for a long time or remember, you'll know what I'm about to say. Remember, I've said this before until I'm blue in the face. The only thing this rally is predicated on is the fact that the Fed has paused, which means the rate cycle, the rate hiking cycle is over. As I said for months on end, did members videos on it and everything else, when they sniff out a pause, or especially when they announce the pause, the market is going to rally. I don't care if the world's burning down around us, it's going to rally. That's what you are seeing. That's what this is predicated on. They are pricing in like some crazy amount of rate cuts next year, supposed to start in March. If that does not happen, guess what? The market will most likely just have a little small correction or sell off or whatever they want to do with it if they're wrong, but they don't care about that. The only thing they care about is the fact is their liquidity. And yes, financial conditions are loosening, whether you want to believe it or not. I've showed you the chart and people still go, no, it's not true. People are still leveraging like crazy right now. People are, FOMOing in and buying in, and the hedge fund managers are going, oh my God. I mean, I showed you yesterday, right? How much money they've lost short in this market, right? So now they're trying to play catch up so they can keep their jobs, okay? And so that's what you're seeing happening. Everything that was just beat down, like 90% is getting rotated into because you can get your bigger bang for your buck than you can the Mag 7 right now, which is why you've seen them some of them just stagnant, right? Like Microsoft and Apple, the big boys, right? Because, I mean, yeah, you can push Apple up a little bit more, but wouldn't it be better to push this stock over here up, like maybe push Tesla up, which has been lagging, right? Or going to the smaller stocks like a Shopify, Roblox, you name it. There's just a billion of them out there you can talk about and push those up. They can go up, 20, 30, 40, 50, 60% in a matter of a month. Yeah, that's how you do it. So that's what this is, okay? This isn't fundamentals. I don't know how many times I got to say that. This is not fundamentals. That makes no sense. And you're seeing earnings come out, right? I mean, FedEx is getting destroyed. Nike's getting destroyed. I forgot the other two that came out this week. I mean, they're all getting nuked because they're like, yeah, we got to, either lower or not raise our guidance at all for 2024. So, and we'll see. And if the market's wrong, it'll just sell us back off. That's it. That's how it works. You know what I'm saying? And you just happen to have a Fed pause in a part of the time of the year, which is really good for small caps already, right? Which are down massively 33% from all-time highs versus the rest of them, and things like that. So that's what it is, okay? It's not. I don't believe in bull or bear camps. For those who are new to this channel, I can't stand camps. Okay, it drives me nuts. How people get entrenched in one, I just don't know. But that's on you to do that. But I just believe in playing the markets in front of me. I believe in seasonality. I believe in a Fed pause. All this different stuff from research. That's it. Okay, and I do my videos and I put my money where my mouth is in my personal life. So that's how I roll. So that hopefully answers you guys' questions on that. Now, first question or second question, however you want to look at this, comes from Options ZJ, and it says, so when are we going to fill the gaps below on SPY? I was told gaps must get filled. Is that wrong or right? That is 100% wrong. And I've discussed it before, and I'll show you why on a visual chart in just a second. But understand gap downs, which normally happen when earnings get bad or we're going into a crash or something, those right there are going to get filled many more times over than gap ups. Why is that? Very simple answer. You ready? Because the market goes up over 70% of the time. This chart right here will tell you right here, this is 60 years worth of it. When you look at it, is the stock market going up more or is it going down more? Okay, it's pretty easy to see, and I believe in visual effects here. This right here tells you, yeah, the market's going up the majority of the time. This is why gap downs feel more than gap ups. The only way gap ups are going to feel is during a crash. And it has to usually be a pretty significant one, as you can see, because what are you seeing happening there? You're seeing the market go up a whole lot, right? And so a whole lot more than it goes down. And so that's why, yes, the gap ups will feel on these crashes and stuff. But right now, those gap downs, or I'm sorry, the gaps on the SPY that are left over, that's going to take a major move down to make that happen. Okay, so just understand that the Qs have the same thing on it, and that's just the way it is. So no, they don't always have to feel. I mean, Tesla and other stocks have gaps from years ago. They'd have to crash almost 50 to 75% to fill some of those gaps. And so hopefully that helps you out there. Now, speaking of these buy now, pay later stocks. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Got a question right here. It says, can we get a few words about Affirm, please? In my opinion, Affirm is the most bullish stock out there with a huge upside potential. It can go easy to a new all-time high. I don't know about that one. Because when you look at this one, I mean, you can see, there, major rally up. No ifs, ands, or buts about that. Again, when we zoom out, though, you can see, I mean, this one's one of the ones that crashed and burned, right? I mean, all-time highs would be, what, 178 bucks? Could it get there? Sure, I never discount that, but I mean, the move's been crazy. And the reason why this is happening is because, buy now, pay later stuff, because of the holidays and stuff, is booming, right? A lot of people are coming out and they're using this. I don't use it. Let me know in the comments if you do. But again, I think even Amazon started accepting it, if I'm not mistaken, which was a big one. But understand what moves these stocks. And this is the simple thing about Affirm. Why Affirm and Upstart move like they do? Look at the floats. The floats are minute when you compare them to other fintechs, okay? And when you go over here, here's what I'm talking about. Here's PayPal, right? You can sit there and see what is their float. It's over $1 billion. So it's almost 5 times the float of Affirm, right? You go over here to Square, you see the exact same thing. All right, it's double that float, which is why it's moving a bit more than PayPal. Also, you got SoFi. Look at this one, which was a SPAC, SPAC, when it came out. So it has a lot of shares, about, 3 times the size of the float. And so the reason why that's important is when you combine that, like I put in Friday's news brief right here, for the members in the morning, is short sellers, right? Affirm is heavily shorted, right? And so you can see right here, this even talks about how much money short sellers lost on Affirm. They lost almost $1.5 billion just on Affirm alone, according to the data that's out there. And so when you combine a big, huge, position of short sellers with a smaller float, guess what happens when it starts to move up? It's rapid fires. It's just fuel, and it goes up really fast. Upstart's the same way, okay? Not sure about Lending Club, but that's why SoFi doesn't go up as much. It's not as heavily shorted, plus the float's much bigger. What was it, 3 times the size of Affirm? And so again, and then on top of that, you throw the news about buy now, pay later. It's all over the news media. So boom, stuff is just kicking in. So could it get there? Maybe if it keeps going. I just don't know the fundamentals of it. If it ever starts reporting earnings, I don't know what the earnings are going to look like. I don't pay attention to that kind of stuff when it comes to Affirm or any of them for that matter. So, or any of the buy now, pay later stocks. So you can let me know in the comments if they have good fundamentals or not. But really, that's more of a technical trade to me. And congratulations to the people who are in it, moving it up, because yeah, it's big time right now. But that's why it moves like it does. Just FYI. Now that leads us to White Bearded here. It says, Mike, would you consider researching what a blow-off top looks like? And so let's just go into what a blow-off top is, what you're looking for, and then what's a good example. Okay, so blow-off top is a market phenomenon where there's a sudden and sharp rise in stock prices, commodities, or other securities, followed by a drastic decline. This is often the result of speculative trading and can be a strong indicator that a particular asset has peaked. And then to me, this is the most important thing to understand here. There's a difference between a blow-off top and a swing high. A blow-off top and a swing high may look similar on the chart, but they're not the same thing. A swing high is a peak that occurs during an uptrend, but doesn't necessarily signal the end of that trend. Blow-off tops, on the other hand, are often the final hoorah in a long uptrend, signaling a likely reversal, okay? And so what are we looking for here? There's 3 telltale signs that we should be looking for. And one is explosive price moves, a sudden change in trading volume, and psychological levels of support, like the 50% retracement level. So we've definitely had explosive price action. We've definitely had above average trading volume since November started, that's for sure. And then look for round number price resistance, 4,600, 4,700, 4,800 on the S&P, right? Would be good numbers to look for, okay? Now, a good example of blow-off top is going to be Bitcoin is definitely going to be the prime example here, and you can see, you know, massive amount of volume coming in. Look at that RSI. Woo! I think it was like 94 right there or something. Big, huge move up, right? And you'll kind of see a double top. You look at that wick to the left right there, and then massive move down. You even see the bearish divergence right there on the RSI screaming, and that's what you end up getting. So Bitcoin, you can find a couple good examples on that one, and you can find them on the stocks as well. But the biggest problem is trying to say, okay, which one's the blow off top and which one is just a swing high. That's going to be the big thing to look out for. But I would say look out for that bearish divergence on the RSI. So that's what a blow off top is. That's a good example. We'll see if that's what this is going to be here. We kind of checked a few boxes, right? And that leads us to the next question from Jake here. He says, with the money deposited in Roth IRA, do you buy dividend stock, growth stocks, or ETFs? And for me personally, I do a few different things. Mostly it's just stocks though in mine. But I will say this, understand, I didn't mention this in the last video about Roth IRA. Be very, very careful if you're trading in there to not blow up your account, because unlike a trading account, a regular trading account, if you blow up your Roth, you're screwed, because you can't just go and put more money into it like you can a regular trading account. The government limits what you can put in. If you start putting any more, you're going to have penalties, probably have to withdraw it, all this other stuff. So if the max is 7,000, you blow the 7,000, let's say by June, you're done in that account. Okay, so you got to be very careful about that. Don't blow that account up. I know a lot of people do trading there, and you know, that's good because they don't have to pay for the gains. But if you blow it up, you're screwed. So just be very careful on that. But it is flexible to do whatever you want to do. I know some people, they're very conservative with the Roth. Some people are very aggressive. Some people are right in the middle, right? And so I know, I do options in mine. You can do options, right? So I do options sometimes as well. And some people do leap options in their Roths as well. So instead of buying the stock. So plenty of things you can do with it. Just don't blow up the account. Okay. Now, next one here says, just wanted to ask if you know what ticker represents Fed injection or central bank liquidity injections. The one I use is this right here. You can pause this and click on it. But this is the Fed's balance sheet, the Treasury, and then I believe the reverse repo program. If there's another one, put it down at the bottom. I'm sure there's got to be a couple more out there right now. Something else to make sure you track is the Federal Reserve Bank Chicago. You look at the website and it'll tell you if the financial conditions are loosening, if financial conditions are loosening or tightening. So that's very important to know, and you'll see the chart and everything down there. And then our last one comes from Kevin here, and he says, is it me or does it seem the second year of a 4-year presidency the market crashes? 2026 might be a good time to short. Actually, that's not really true. If you look, look at the dot-com bubble. It was in 2000. That's when Bush was just coming into office. You look at 2008, Obama was just coming into office. 2020 up there was the second, would have been the second term for President Trump. So it was a presidential election year right there. You can go to 2018. We had one at the end of the year, so that was a crash. 2022, no doubt, for sure was a crash. That's the second year. And so, could it happen? I don't think it matters the second term or what, or second year of a 4-year term, or it's the second term or whatever. I don't think any of that matters. But I will show you something that's pretty cool, actually. And it's this right here. I actually did a video of this for the members, and somebody sent this to me, or I found it somewhere. And this was done many years ago based on cycles. But you're talking about 2026. Well, actually, yeah, this cycle calendar, which is remotely, it's shocking how accurate it is. But you see in 2026, they're predicting that. But also look at 2023 at the bottom. They predicted that to be a good year, this person did. And it was a good year, right? And it's usually, to me, off by a year. You see where it says 2019 at the top? Instead, it was 2020 it happened. It had 1999. It started to decline in 99, but it was 2000 was the big one. But it is amazing. This thing was done many, many, many years ago. And I believe that's called the Banner cycle or something like that. But it was done many years ago. Somebody was just trying to base something off of, like, he was a farmer, off commodities and different things and figure out the cycles and stuff like that. And it's amazing how accurate it is. It's not very far off when you look at it and stuff. And I went back in detail and looked at it and everything. And it's pretty interesting thing. So anyway, hope you guys have a great holiday. If you have any more questions, please put them in the comments, and we'll throw them in next Saturday's video. Please be safe out there. Don't forget to hit that like and subscribe button on your way out. And I will see you Tuesday.